All right, folks, the market's picking up a little steam this hour. We call it the CP effect as we head into the last hour of trading. My next guest is an expert on smart investing and ways to protect yourself. And he says that hashtag Wall Street is ripping off the average and possibly inexperienced ma and pa investor. Joining me now, Wall Street Unplugged podcast host Frank Curzio. Frank, you and I have known each other for over 2 decades, and you've always kind of focused on the small investor. A lot of people talking about, people investing on Robinhood and these other platforms and being encouraged to overtrade. Talk to us about what are the traps people are probably seeing right now.
Well, I think, and thanks so much for having me on, Charles. I really appreciate it. I think the biggest thing when it comes to the market is the millennials are investing, and that's a great thing. We usually see that during bull markets. But now when you see more people inexperienced coming in, you're also seeing like the Hertz deal, something that you and I know is completely worthless. They're selling common equity in a company that's bankrupt where the credit is supposed to get paid first. Yet they tried to sell that offering out, even though the company, Hertz, said it was worthless several times in their filing. The underwriters know it's worthless. The creditors know it's worthless. So I commend the SEC for actually coming out and saying, okay, we're not going to do this deal, right? Because usually regulators are kind of late to the party when people lose billions. Also, WeWork was another one. I mean, the big players involved in that $47 billion valuation, we kind of got lucky that they pulled it because some people started looking under the hood and knew that the books were cooked. Now it's worth $3 billion. So you're looking at Wall Street's always looking to take advantage. They're going to not just take all your money, they're looking to take your shirt, your sneakers, your pants, everything from you. And you have to be prepared. You got to do your own homework. And especially if you're a new investor in this market, which is a great thing, you can go through the period of arrogance and then humility. Those emotions are necessary to become a great investor and focus on risk. And you just got to be careful out there because Wall Street knows that you're a new investor and they'll take everything from you, believe me.
To that point, though, Frank, some are saying, these platforms like Robinhood and perhaps others giving away shares, scoring shares in a way that makes it more exciting, almost like, almost inducing a gambling type aspect to it. And, of course, all of this order flow, they sell it to hedge funds. So they're making big money off of this, even if people aren't paying a commission. And people should be aware of that, right?
They should. I mean, Robinhood's a great site, but they have to make money, right? They're a company. Companies have to make money to survive. And they make money by selling. And a lot of that's not just going to regular third parties. It's going to high-frequency trading firms, which are able to execute hundreds of millions of trades a second. So it's almost as if they're front-running. So you think you're getting this trade for free. But, guys like you and I understand that behind the scenes, they're seeing these orders, like special limit orders, in the market, which is like showing your hand when you're playing Texas Hold'em, and they're able to front run a lot of these things, and that's one of the ways they generate money. Again, another way that you have to be careful.
Frank,
and
in 20 seconds, SPACs, these special acquisition companies, they're hot as heck. Are you buying any of them? DraftKings, Space is up big today. A new one, Tortoise Acquisition's up huge today. Are you buying any of them?
DraftKings and Nikola Motor, I would buy, only because you look at the total addressable market. Don't look at the fundamentals, because those fundamentals are going to be really crazy, just like Apple, Netflix back in the early growth phases. But those are the two I would recommend, not so much Virgin Galactic, because I don't think they have a huge total addressable market. So DraftKings, Nikola Motor, two I would focus on.
All right, Frank. You are the best, my friend. Thank you very much. Liz Clayman, the S&P was up 12 and the